Aloha, ladies and gentlemen. It is Monday, August 4th, 12:37 p.m. Hawaiian Standard Time, 2025. Because towards the end of August 2025, I will be relocating my life to the Eastern Standard Time Zone, and because I'm currently living on an island, I will have to fly on an airplane to relocate myself. Even if I was driving, that would be considered travel. Either one's travel. This is going to be a little faster. If I was driving from like 5,000 miles away, it would take a little longer. So, however you're traveling, whether it's by airplane or by car, boat, train, foot, bicycle, jetpack, whatever way you're traveling, there are certain considerations to work through in order make to keep your trading active or possibly not be trading at all. That would be one of the considerations. But what are you going to do with your trading while you are traveling? And this is an expansatory list. In all transparency, I don't even know if expansatory is actually a word. If it's not, I'm making it up, meaning that this list is able to grow and expand with every viewer because these three different considerations I bring up, if you can reword them and re-angle them and get more clarity of how to conduct your trading during traveling by modifying the question so it turns into a new question, or even if it's not a completely new question, but it's covering a different angle of the same topic. So we're gaining more and more clarity, kind of like a diamond. Every little facet that you can turn to and see another angle of, it just ensuring that we're not missing anything. And while trading while traveling is something that more than likely you want to ensure that you're not missing anything because at sometimes you might not be able to take any action at all into monitoring a trade or adjusting a trade. So, without further ado, let's look at number one. How much mental energy do you want to devote to trading, thinking about trading, logging in to check your trades, worrying, wondering, being happy? Anytime you're thinking about it, that's that is using mental energy. Whether you're obsessively thinking about it, whether you're controlling and proactively thinking about it, whether you're any amount of energy used to mental energy being devoted to the in trading. How much do you want? Because if you are going to be in some sort of situation where it's going to demand a high amount of your attention and focus already with the way your vacation is set up or the way your traveling is set up, then you probably want to minimize the amount of mental energy that the trading needs. Or vice versa. Maybe for some reason you don't have to use much mental energy for your traveling and you can devote more energy to it. So that would be something to consider and work out. And again, if you could come up, the more angles you can rework this question into and come up with more questions to ask and answer, more than likely, the better you will fine tune your approach to trading while traveling. Let's look at number two. How much risk are you willing to take while you're traveling? For myself, since it's the 4th, I'm going to be leaving here on the 22nd, and I'm not just traveling, I'm relocating. So, because I'm relocating, I'm factoring in that there might be some expenses that I wasn't aware of that I might have to pay. So because of that, I have really been looking at what trades do I want to set up into these coming weeks as my trades close from the previous weeks. How do I want to allocate my funds before this move? And how much risk am I willing to take? So, for example, let's say if I've been selling cash secured put options two strike prices away from where the stock is trading, and it's giving me, let's just say, about a 15 delta, but I'm happy to buy this stock at that price. The only thing that will change though is I will be taking at least 100 shares, and so the cash in my account will be deducted by whatever the strike price is, whatever amount I'm paying for these 100 shares. But in the big picture of my portfolio, I wanted these 100 shares at that price. But do I want to do that leading up to my move? Or would I rather sell a lower delta if I'm going to sell on the same stock? Would I rather take less risk of being assigned and have a higher probability of it expiring worthless, even though I'll be making less money on the premium? What is it? Where do I want my trade offs to be? Because it will be trade offs. You're just managing different risks and trade offs. So, how much risk do you want to take, and are you willing to manage during the time you're traveling, and in this case, leading up to? Number three, consider trades that would allow you to win regardless of outcome. If you think that that's impossible, then you need to learn more, because I can think of at least one trade that allows me to win regardless of the outcome on expiration date. If you are able to do that type of trade or come up with another one, here's something else that might, maybe it would be a win. Let's say you wanted to buy BTCI. Let's say you wanted to buy BTCI. This Neo's ETF on Bitcoin. Let's say you wanted to buy this, and we see on the weekly chart it's been pulling back. It pulled back to about the 9-day exponential moving average and hitting a little bit of green there. Here's some, looks like some support there. So right around the 60, looking back, see prices kind of got clumpy. It seems like right around the 60 it starts catching some support or resistance depending on which side it's on. On this case, it's on the top side of 60, so it seems like it's going to catch some support right here. Well, maybe you thought 60 is a good price to buy BTCI. Or maybe you think 59.50, whatever it is. But it's getting closer, right? Because X amount of weeks ago, about a month ago, it was trading closer to 65. Now about a month later, it's getting closer to 60. So you could, in theory, put a good till buy, good till close, buy order in on the market, and for how many ever shares, that's up to you to decide. But then that order is just open, and if you get filled, good, you won. If you don't get filled, you're not taking any risk. Your money's still right there. You haven't lost any money. Maybe that's a win too. So maybe this could be considered to some people a win-win trade, regardless of what happens. My favorite win-win type of trade is selling cash secured put options on stocks that I would like to own at a strike price that I'd be happy to buy at. Just for an example here, I pulled up MO, strong dividend stock. We see over the last 3 months, it's basically been trading sideways until recently it broke out of this kind of, it was a lower high type of sideways channel here, but it broke out and now it's around 60. But maybe you think 55, $50, like maybe you don't want to buy around 60. Maybe you want to buy only if you can get lower than that. So then you pull up your option chain and start looking at what are some, well, when are you going on vacation? That's the other part, is when are you going on vacation? So we'll use my scenario since I won't have to make it up. So it's going to be August 22nd that I'm leaving Hawaii. So here it expires on August 22nd. I could do that, but let's just take a look at around $55. It's saying there's no bid. Bid is the price that you sell at, and right now that number is zero. $50 strike price, number is zero. Allegedly, there's nobody wanting to buy at 55, but at 51 and 52. So maybe we can get assigned, um, not assigned, sorry, get filled on that for possibly about 17 bucks. But I don't know, that just seems a little odd. Let's look at going out a little more. So here would be the almost the end of August. It's going out to 55, kind of same thing, 50. Of course, I should check the earnings date. Give me 1 second. I'm going to check it on this other screen that you can't see. Earnings. Okay, July 3rd, 30th. So this past July, Alteria, Altria, however you pronounce it, already had its earnings. So that is good. Let's look at the 5th of September. Nothing looking too exciting. Okay, now we're stretching it out to about 40 days. Still saying nothing. And let's take another look. All right, 55. Looks like we might be able to get filled. Now, is this the greatest fill price? Is this the most efficient use of buying power? No, it's not. But if you think about the considerations, this is not about it's not isn't make most efficient use of buying power considerations. It's trading while traveling considerations. So you're going to have trade-offs. What trade-offs do you want? Now, if I was going to do this, which I'm probably not because I would look for something that's a little more profitable, but just for if for some reason I really wanted to sell an option on MO while I was going on vacation or doing some traveling, I'd probably pick the 50 strike price. And the reason why is it's got a low probability of getting assigned. Right now, it's got about a little less than a little over 4% chance at this 3 delta. The highest that sold for today was 11 cents. So I might be able to squeak that out. Put a order in for 11, and then tomorrow we'll see if it gets filled or not. But this is what I would probably, if I wanted to minimize the amount of risk, I would be really happy with buying this at 50 bucks. So maybe I would do that. Maybe at 55, make a little more money. But at the 55, you see the probability is a little over 10% of getting assigned. Got a lot more open interest at the 50 than the 55, but still a considerable amount of open interest there. Again, play with the different stocks, but these are things to consider as you are navigating something that you'll probably be able to pull off relatively soon, which is trading while you are traveling. Hope you guys have a fantastic day, the rest of your day. Aloha.